Everybody thinks car insurance is a scam until they have a car accident. Hey everybody, welcome to the Build Young Grow Wealthy channel. My name is Walida Shree, and I help millennials to control, protect, and grow their income to one day obtain financial freedom. In today's show, I'm going to help you to look at your car insurance to see if you are saving money by having the right policy or if you are losing money by having the wrong policy. So without further ado, let's get into this. Did you know that car insurance is basically required in almost every state in the country? And by every state, I'm talking about specifically here in the US. So first, let's talk about how your car insurance premiums, or the amount that you pay per month or every 6 months or every year, is calculated so that you can make sure that you are getting the best rates. The first thing that they look at, and this is not in any particular order, but one of the things that they look at is the make and model of your car. So the more luxury your car is, you can almost expect to pay more money, except if you have an older car. So the other rule of thumb is if your car is older, then you're going to probably pay less in premiums than the people who have the newer cars. The other thing that's taken into consideration is your credit score. So the higher your credit score, the cheaper your car insurance is going to be. They collect data every year, and statistically, I guess what they've concluded is that people with higher credit scores typically have less car accidents. So if you are unhappy with your credit score, or you need to increase your credit score so that you can get the best rates, I'm going to put a link to my course in the description box below that can help you with your credit and your budgeting and everything you'll need to help benefit you in the long run. The third thing that is considered is the amount of coverage needed. So your state is going to require you to have the minimum liability or the minimum insurance requirements. The more coverage you get, the more your premiums is going to be. The fourth thing they'll consider is your age and your sex. So just rule of thumb, the younger you are, the more irresponsible you are, which means your car insurance is going to be more. My grandparents would not let any of us drive any of their cars if we were under the age of 25, because their car insurance premiums will go up. The sex of the person also is taken into consideration. Males are traditionally going to pay more in premiums than females the younger they are and the more sportier their car is. The fifth thing that is taken into consideration is your use of your automobile. So if you are a person who works in the gig economy, so these are your Ubers and your Lyft drivers and your Postmates and any of those type of delivery service and driving services, you're more than likely going to pay higher in premiums because you're in your car a lot. Additionally, if you are a person who used to work outside of the home a lot, but you're now working from home, you may want to give your car insurance a call so that you can get a reduction in your premiums because you're less likely to get into a car accident because you are now working from home. The other thing is your driving history. So the better driver you are, the more money you can save. The more you start to get into car accidents, the higher your premium is going to be. The last thing that is considered is your location. So your zip code, they base it upon how many accidents occur into your zip code. And you can't lie about this. I wouldn't lie about this. But if in your zip code, it's more prone to people are more prone to get into accidents, your premiums are probably going to go up. So for instance, this year my insurance went up $15. Even though I didn't contribute to the things that happened on the road this year, I still was penalized because of my location. So just know that you can do everything right and that you will still be responsible for the overall people in that area for how much you would have to pay. Now let's talk about the 6 parts to your insurance policy. So there's part A through part F. So part A is going to be your liability insurance. So this is going to cover the person who you hit, and it's going to help pay for their bodily expenses. So if they have to go to the hospital and have any type of medical expenses that are involved due to the accident, and also to cover the property insurance. So this is going to cover each person per occurrence per property. You're going to usually see 3 numbers. The first number you are going to see is per person per bodily injury. So let's just say you see a 10, and that 10 represents $10,000. So that means each person can get up to $10,000 per occurrence. Then you'll see that middle number, and let's just say that's 50. So that'll be $50,000. That means per occurrence, the insurance company is going to pay up to $50,000. So $10,000 per person, up to $50,000. So that means if there were 5 people involved, they'll all get covered. But if there were 8 people involved, then you would have to cover any additional expenses because they're only going to cover up to $50,000. And then say you see 20. The 20 is going to represent $20,000, which means that that's going to cover up to $20,000 in property damage. So check with your state to see what the minimum requirements are for your liability insurance. B is going to be the medical payments, and this is optional. So this is going to cover you and anybody involved with you. It really doesn't matter who's at fault, but it's designed to pay the bodily injuries. So say you don't have medical insurance, then you definitely want to consider getting the medical payment portion of your car insurance, because this will help you not to have to pay out of pocket. However, if you have really good medical insurance, your medical insurance will probably cover a good portion of that. So you don't have to do it, because it's basically like you paying twice for the same thing. This can also cover funeral expenses due to car accidents. Part C, uninsured motorist or underinsured motorist. So this protects you if somebody hits you who does not have insurance, or if someone who hits you and say they only have the limited insurance, but they don't have enough to cover your actual medical bills or your property damage. So you definitely want to consider getting this if you live in an area where you're more likely to get into a car accident, because here in Texas, a lot of people are driving around who don't have car insurance. So if you know you live in a state or you live in an area where people are known for not having car insurance, then you definitely want to protect yourself by adding this on. And it's only going to cost you a few extra dollars per year when you look at the overall expense, but it will save you a lot of frustration and a lot of money, essentially, because you don't have to pay out of pocket because they don't have the money. And you can try to sue them, but if they didn't have money to pay for car insurance, then they probably won't have money to pay for you if they have a car accident. Part D is more so protection for you. So Part A is protection for anybody you hit. Part B, like I said, that's kind of optional. That's just additional medical expenses coverage. Part C is if somebody hit you who does not have car insurance. Part D is to protect you. So Part D is if you caused a car accident. And there's two different types. So there is collision and there's comprehensive. With collision, it doesn't matter who's at fault. You will get your medical bill and possibly your property, depending on your state, recovered. But with the collision insurance, you want to take into consideration the make, model, and year of your car. What is going to happen is your insurer, so say for instance, if you use Geico, they are going to go to something such as a Kelley Blue Book, and they are going to put your make, model, year, how the mileage and the condition of your car inside of the system to calculate how much the car is then valued. So if you, for instance, paid $10,000 for your car, say it is a 2005. So if that car model comes back and they say it's only worth $1,000, then you're probably only going to get $1,000 back. So depending on how much they're going to actually pay you out of pocket, then this may not be a good deal for you, especially if your deductibles are like $250 or $500 or even $1,000. You might as well just take that money and put it into a savings fund for just an emergency for a situation like this. This may not be good if you have an older model car, but if you have a newer model car, then this is probably a better fit for you. Additionally, even if you have an older model car, if you are financing your car, you may want to check with your loan to be sure that you don't need collision or comprehensive insurance. Because they technically own the car, you want to make sure that they don't require you to have it. Comprehensive, this is a little bit different. Okay, so comprehensive is basically hailstorms or fires or floods or theft or any of those type of natural disasters or things that are outside of your control. The reason why I now think that it's good to have is because in Dallas last year around this time we had a storm. If I would have parked my car outside and not in the garage, if a tree would have fell on it, if it would have gotten damaged by hail, the insurance company said that they would not have covered it because I did not have this as a part of my policy. So just make sure if you live in an area, especially those on the coastal lines where you have hurricanes and things like that, or in California where you have fires, you definitely want to consider adding the comprehensive because you just never know. You really just never know. Part E is duties after an accident or loss. So this is where the common sense factor comes in. So if you get into a car accident, this is what you need to do. First things first, you will need to notify the insurer. So that would be your Geico, your Progressive, your Allstate, anybody, Farmers, State Farm, it doesn't matter. Whoever you're paying your premiums to, that's who you'll need to call to let them know that you've had a car accident. The next thing you'll need to do is you'll have to file proof of loss. So they may ask you to send pictures. They may ask you for a description of what happened, have witnesses, and you'll have to submit that paperwork to them. You'll also want to cooperate because they'll need to investigate to make sure that what you are saying actually is what actually happened. So you'll want to cooperate with the investigation, and this could take a couple of days, a few weeks, and sometimes even a few months before they can actually finalize the results on whether they will or will not pay for your car and your bodily expenses if you had to go to the hospital to be paid for. And then the last thing is you want to file a police report, because if you don't file a police report, you may not get your case to be in your favor. Having a police report will basically indicate what the police saw or what the police has down in terms of pictures and writing versus what you said actually happened. You want to have the police report done as soon as possible at the time that it happens to ensure that you are going to get covered. Part F is your general provision. So this is just some FYIs for you. You want to make sure that you understand that every state has different liability requirements. So for instance, I live in Texas. We have higher liability requirements than Louisiana and Oklahoma, which are our neighboring states. So if I were to drive to either of those states and had an accident, because of my minimum liability that my state requires, 9 times out of 10, I'm going to be good in terms of them covering the expenses. However, in those states, if they come over to Texas because they have lesser requirements, if they have an accident here in Texas, they may have to pay out of pocket if they only have the minimum liability insurance, because we have a higher standard here, which means that they're going to have to pay the difference in whatever their insurance doesn't cover. So you want to keep that in mind, that it varies from state to state. So you want to contact your insurance providers to let them know if you're traveling. Also, traveling country to country. So we live near Mexico here in Texas. Like, that is our neighboring country. So driving to Texas will not get me covered, depending on my insurer. Just like when I stayed up north, Canada was our neighboring country. So depending on my insurer, I may or may not be covered driving into Canada. But if you go into a territory like Puerto Rico, then you may get coverage because it is considered a territory of the U.S. Now I want to give you who you should buy from. So you have options. You have captive, and then you can also go online and you can purchase that way. Now, captive agents, basically these are the direct companies that you are buying your insurance from, whether that's State Farm, Geico, Allstate, Farmers, Progressive. It doesn't matter. Whoever your favorite is, if you go directly to them, that is considered a captive agent, because they're only going to give you quotes from their company. Whereas if you shop online, you can go to websites like Policy Genius and ratekick.com, and you can put in your zip code and your information, and they're going to give you all of the comparisons for all of the different companies so that you can see who has the best rates for the best coverage for you. I say go online, shop around, and then if you want something, go directly to that company, and then you can talk to a captive agent either online or on the phone to try to get the best rates for that company. But you would already have an idea of what's considered a good rate for you. But again, they're going to include your credit score. They're going to include your credit score and your driver records and all of those things. So what you see is basically an estimate. It could go down or go up depending on when they calculate all those things into your policy. Final tips. Always buy more liability than the minimum. It saves you more money over the long run. Consider increasing your deductibles. So the newer your car, I definitely recommend this, but consider increasing your deductibles, because the more you pay out of pocket, then the lesser your premiums are going to be. If you have an older model car, then not so much. You want to determine if what you're going to pay in deductibles is going to be what you get back if you actually have an accident. Always shop around for the best rates. And then lastly, ask if they have bundle deals. You could potentially save money on both your home insurance as well as your auto insurance. So always ask, because it's better to ask than to not ask. So that's all I have for you guys today. I hope you learned something today. I hope you're able to apply something and actually save money. If you found this information valuable, consider sharing with a friend. And if you haven't already, subscribe. Give me a thumbs up if you've learned at least one thing, just one thing for today. Give me a thumbs up so that other people can see this video. And if you like content like this, consider clicking the notification bell so that you are notified every single time that I upload them. So that is all I have for you guys. Until next time, I will talk to you guys later.